Hey guys, welcome back to my Stock Life podcast number 12 with one and only Mr. LB.
What's going on, bro?
What's up, brother?
Chilling.
Good to have you back.
Good to be back.
That's good. We missed you.
Thank you. Missed being here. Missed Tulum.
You missed the best trip we ever had in Bacalai.
Oh God. Yeah, I heard you lost some keys over there.
It was crazy. But amazing trip with the entire team. We definitely missed you. It's good to have you back. And how was back home?
It was good. You know how it was. You went a little shorter time than me. I was there for a month. I mean, Toronto is Toronto and Tulum is Tulum. There's a lot of differences, completely different worlds. But I mean, nothing's even opened up in Ontario. I don't know what the hell they're doing out there. So it's good to be back here, other than the mosquitoes.
One more thing I just remembered. So me and LB, we went back at the same time. And the first thing that happened was we got fined for $13,000. Yeah, so we have tickets pending, which we need to pay for $13,000. He got $6,500. I got $6,500. So for something that we never did. But
pretty much. That's how the Canadian government rolls, man. They just want money. It's all a money grab, I'm telling you.
Yeah. But moving forward, man. So guys, today, I was thinking, what to talk about since I'm the host today and LB is the guest, from host to guest, guest to host. And few things that came into my mind. Some of you guys that messaged me, him, or T regarding where do you start from if you've been trading for 6 months. You're still wondering what indicators you use, in the market, or certain things that you want to apply to your existing trading style or something that you want to learn. So I'll just start off by for a new person, a new trader that wants to let's say not new, somebody that has been trading for 2 years, I think, because we get a lot of these questions in the group. A lot of people that want to trade full time now, they've learned many things in the past few months from MyStockLife, and they want to move up.
Yep.
So one person just messaged me today, so I was like, let me cover this in the podcast. For a person to be able to trade full time, how big do you think the account should be?
Oh, that's a tough question, man. I don't think there's any set number that you can just set in your mind to trade full time.
Mm-hmm.
I feel like if you're successful working and trading, why would you stop one or the other? But at the same time, that's such a hard question to answer, man. Everyone's needs are different. Everyone's wants are different. Like, what do you want out of life? What are your goals for the next month? What are your goals for the next year? There's no way to answer that correctly. You'll know when you know, you know. It's not for me to answer your question. It's not for Ricky to answer your question. It's not for T to answer your question. It's just something that either you know or you don't know. And I say don't rush into trading full time. It's a lot harder than you think. Everyone goes on lucky streaks. Everyone goes on bad streaks. And it's a learning process. Me, Ricky, and T can tell you all we want about risk management, about fucking trading, about learning this, learning that. But at the end of the day, the only way you actually learn something is if you actually go through it yourself. So it's not a 1 year thing. It's not a 2 year thing. It's not a 5 year thing. For some people, it could be after 6 months, you're ready to trade full time. You're good to go. For some people, it could take 10 years. But there's a lot of learning. I've been trading for how long? Like at least 7, 8 years now. And I'm still learning new things every single day in the market. And sometimes I feel like, why am I doing this? Sometimes I feel like, hell yes, I love doing this. You know what I mean? So.
Well, I hear you, because even I didn't know the answer to this. I think trading full time, I think it just comes to you on your own. Like, as soon as you gain the confidence, okay, I can make at least $300 a day or $400, or depending on your expenses, monthly lifestyle. I think it's just gonna come to you on your own. And the day you're confident, you see that you're making gains consistently on a monthly basis, where you're covering your expenses, you're saving some, or depending on your life goals, I think. So there's really not an answer to this. Don't start trading full time with 25K, at least 100K minimum, I would say, if figure wise. And another thing, LB, when I met you first last year, but now we're like brothers, came close pretty fast. We work together all day. It's like a family now. But the first impression when I met you, we were at the penthouse in Toronto at that time. So you came over. The first thing I saw you doing on the laptop, we had our charting session open. Right before that, I only met you online, and then you started going through all these indicators, how you were doing charts, and I'm like, man, this guy knows his stuff, right? Because there's a way to put it into words, right? One is knowing, and then one is actually applying the knowledge. There are a lot of indicators in the market. There are hundreds and hundreds of them. You cannot follow all of them. Some are bullish, some are bearish. But let's say even for a new trader, or anyone that's advanced, I think, what are the top three that you use? Top three indicators that you use that you think might be helpful for others as well, or like that are more accurate.
Yeah. So just based on chart wise, I'd say top three that I love the most that I will always use is volume. Volume is number one always, because volume shows you exactly how many people are buying, how many people are selling, and that is the most important thing, especially when the market is run by algorithms. You have to know how much volume is coming in, and that when a breakout happens on low volume, it's kind of like a false breakout. Like for example, we won't get too into that, but I'm saying volume, then I'll say moving averages, and really those are the only two that I would really absolutely need to trade. Third ones I use a lot more. I use like RSI, like stochastics. I use volume profile, but those are all like after stuff. And the thing is, like, it's obviously we're just adjusting to teaching people as well. So one thing I learned in dental school, again, like you said, how can I just speak off the charts? It's because what I learned in dental school was you either read something 3 times, you write it down twice, or you teach someone 1 time and you remember it forever. So I've been going over this. We've been teaching the group for the past 1 year. We did it for free for like 8 months. So once I started doing the charting sessions and the teaching and stuff, so after that, it just became a habit. Like I can just look at a chart and tell you exactly what's going to happen.
Well, not only that, there are a lot of people in the group that we have, like, I can't even name so many, but a lot of people have learned how to do charting from you.
Yeah.
Right, and they say it over and over, and they've started doing their own plays, scalping. How do you feel about that? I mean, somebody learning from you.
Great, man. That was the goal. You got to teach these guys to be self-sufficient. I can't hand feed them forever. Teach them to fish.
That's good. That's good because charting is not my strength, to be honest. I just look at the support levels, numbers. It's a different way. I mean, I can't do charting like you do, so pretty impressed by that. Congrats, man. A lot of people do look up to you.
Okay.
And now before I think 5-6 months ago, you were playing a lot of SPACs, which have a $10 base price. Now, but for the last 2-3 months, or I think 4 months, we haven't been playing them.
Yeah.
Right. At that time, this is just I'm going back in in the past. How did you know that it was a SPAC time? They were going to run, and many equity plays we sold from 10 to 20 or 10 to 30, even up to $40, and sold most of them near the top.
Yeah.
What did you do at that time? What research were you doing that you knew, or that this is what's going to run in the pandemic? Because I followed some of your SPAC plays. I think I told you before. And how did you come up with those? Because that was something totally new, I think.
I think it's just a bunch of reading. You've seen, like, no one really sees how much work I really put into it. Like, obviously, I read a lot. And when it was SPAC time, so the thing that attracted me to SPACs in the first place was there was a $10 floor. So a SPAC is a special acquisition merger. So the thing with SPACs is you can either IPO by yourself onto the market, or you can take the SPAC route. So this was back in the day. SPACs don't interest me at all anymore, like that much, because IPOs, you need to release all these different types of paperwork, all these types of financial regulations, everything to get listed onto the market. But if you go SPAC route, it's like a vehicle to IPO without doing all that extra stuff. Back in the day, now they changed the rules on SPACs. So you have to do basically the same stuff. So basically why SPACs were so attractive was people didn't understand them at the beginning. That's when I got into them, because there was a $10 floor, because basically you look for a good management team, they all invest in that SPAC at $10. So you have a floor at $10, meaning everything under $10 is all their cash. So say me and you put $1 million into a SPAC, and it's priced at $10. Even if it goes under $10, our investors can pull out their $10 and our cash will be the same. So it's all like, it's a floor that it's not supposed to go under. If you buy underneath $10, that's free. You're buying the SPAC for free. You're buying it for cash value. So any business that they put on top of it, it's just a gain. Like, there's nothing else to say about that. And then the reason I jumped on a lot of them, like IPOC, IPOD, TRNE, we crushed so many. It's so hard to remember. It's just Jamat was a good management back then. I don't know about him anymore. And then like we jumped on Peter Thiel's, BTWN still has a chance. Just good management team, yeah. Good FCAC, healthcare, that one's still yet to go, but I still believe in it long term. A lot of these just based on management. FRX was good until they IPO'd. I still believe in FRX. I'll still hold that equity. Turned into Beachbody actually. It might run like P-Ton. So Peloton. So a lot of them still have value going forward, but right now the market's hating them. And you have to go where the money goes in the market.
It was a trend that was played and now it's over because
Too
the
many people.
market makers are not going to give you money like for free like this for all the time, right? I mean, same thing happened with GME and then AMC. Now people are expecting squeezes on all these short interest names which are being shared on Twitter. That's a whole trap in my opinion.
Yeah.
We got those squeezes that we did, right? A recent one that we caught now that we're talking about this NEGG,
Neg.
which was somebody in our group mentioned it, right? Huge shout out to him. I'm pretty sure you love him right now. And so as soon as he mentioned that ticker, right, he gave us the information and you looked at it right away. You jumped in. After 5 minutes, I saw you jump in. I'm like, okay, I'll be do the research. I jumped in. I just followed you. To be honest, I'm like, okay, I'll be do the research. He jumped in. So I bought some calls with you. I sold mine for a double plus, I think. But what made you buy that stock? And now it had a freaking $70 squeeze after in less than a week.
Like I didn't even expect a $70 squeeze. But the thing is, man, like, see how I'm saying, like, you don't know anything about the market. Nobody knows anything about the market. You just every single day you're learning something new. These clove squeeze, AMC squeeze, GME squeeze, Wish squeeze, everything. I looked into them. Why are they squeezing? Instead of just following people's plays in, see why something is happening. So next time it comes up, you're ready for it.
Right.
So when someone called out Neg is trading at $13, the stock is at $13. The highest call option is at $12.50, and the short interest is 140%. If you ever see a short interest above 100%, that means they're making synthetic shares. They need to find those shares somewhere to return them. So whenever that happens, there's always a gamma squeeze. It's always going to happen. Now, I'm not one of those. I don't believe in diamond hands. I don't believe in holding, hodling, apes. This is stupid as hell. There'll always be another name to squeeze. There'll always be another trade. There'll always be another day of stock market. It'll always be there. If you miss out on a couple percent on your play here and there, there'll always be a next one. Like Neg, man, we called it out $13. I said it's going to 27. That's more than 100% increase on equity. Yeah. So we called options at $12.50. I took those options from 3 to 15, which is a 400x or 4x, right? So we got 400% on those options. I sold at 27. That was my price target. I got out, and then today it ran up 120 some percent again. So it went to 71 today. Was I mad? Yeah. Was I sad I missed a little bit of the move? Yeah. Will I do the exact same thing next time? Yes, I will. Because that's just how you trade, man. You can't just hold them. Imagine the people that are holding Neg and then tomorrow morning it opens up under $17.
We've seen this so many times on high squeezes. People end up holding. They don't even sell up 1,000% or 2,000%. They'll hold thinking that the greed kicks in.
I'm going to get $1 million.
From 1,000, the target is to make 1,500, but then they make 10,000 and they still don't sell. They feel good that, okay, I made my money. This is my chance. All these emotions kick in. And then all of a sudden, next day, you end up selling for $2,000 profit, right? Which you end up getting back on another down position on the next one. But take your profits, guys. I think one has to look at the account as a whole. If it's up and is consistent. So locking in profits is another skill altogether, right? Most of the positions that we call in MyStockLife, I mean, they're all in profits usually.
Yeah.
Like last today CRM, PayPal that you called out, beautiful plays. Then you called IWM before FMC came out, 100% on those. And Amazon, we called it, I think, 15 positions this month. They all hit.
Crushed Amazon.
Right?
Holy shit.
But see, that was a trade that we waited for what, 3-4 months in pre-market. We were going every day. So patience, wait for the right setup. Another thing that I want to ask you, this is something completely different. Now, let's say I start with a $5,000 account, right? This is very useful for you guys. Listen, I start with a 5K account. On my trade one, I follow risk management. I put in $500. I double that. For example, my account's at 5,500. I'm happy. I'm disciplined. I put in another 500. I double that. My account's at 6,000. On my third trade, I'm still disciplined. I put in another 500. I'm following consistent sizing, consistent position, everything. But that goes to zero. My account's at 5,500. Now here's where the tricky part is. On my fourth position, traders don't like to lose. What this is, you know what? Let me, instead of 500, let me do 1,000. Let me double this 1,000 to recover my $500 loss and make $500 on top of this.
100%.
This is where discipline goes to garbage, and that trade also goes into loss. Now you're back to a 4,500, I think. Yeah. Now you're net down. Yeah. Now those emotions of or being disciplined. What tips do you want to give people? Because people, like, this is the reason accounts go down, even though you're right majority of the times. But then your one trade, you end up going heavy, which goes to zero, which
Yeah.
takes your account down. Give some tips to our listeners, some guys which are.
Man, it's another thing. Like I always say that treat this as a business or it's gonna ruin you. Like if you treat it like a casino, you're gonna get wrecked. Your account's gonna go to zero. I've never blown up an account in my entire life. Ricky's probably the best teacher of risk management, but I say the same thing. Warren Buffett could teach you this stuff, you're still gonna do the same thing. Until you realize it for yourself, you're not gonna learn anything. So basically, I've done it, he's done it, everyone's done it. Every professional trader you know has done it. I get on a hot streak, I'll take a 10K position and I'll win on that. I'll win, say 10K, I win 5K on that trade, right? So next trade I take 10K, I win 2K. Next trade I take 10K, and then it's like a play like neg.
Yeah.
That 10K could have turned into 160K, but instead I sold it for 50. So I made 40K profit. I'm happy, but at the same time, that greed comes into me. So the next time I see a play like neg, I'm gonna put that, instead of putting 10K principal, I'm gonna put all the profits that I made into it. I'm gonna pick a 50K position in neg. It's gonna go against me, and then right away all my profits are gone. Plus my principal, my original, is gonna be gone. So that's why you have to keep position sizes similar. I say this 9,000 times in the last 6 months, but it's so important, like very, very important.
All comes down to managing account numbers, risk management. If you're not calculating your numbers, if you're not working them out, it's not gonna work out. Like me, Amazon, like after many days, right? I never journal my trades. It's been a long time. I used to, but for once, I was actually writing my positions down on a piece of paper. There was spreads I had because I was forgetting, right? And I was seeing what percentages am I taking on those. And some of my Amazon calls, my 3,700 for August, I did not want to sell them, but Chinese stocks came down, they took the dip, and my overall account came down a little bit because of that, but Amazon held it up in profit. So I had to sell my Amazon because I looked at my account as a whole.
Exactly.
And so certain things that you have to do, because every position, any stock that you own in your portfolio, you are the manager of that position. I'm not going to come do it for you. LB is not going to come do it for you. T is not going to come do it for you. Right? So that's something you have to control. Any other one more thing. 1 or 2 long-term stocks, because I know you buy equity every now and then when you lock in some profits and you call it, I'm never selling this. For example, Nvidia is up huge, right? And then many names where I think I'm holding with you as well, we're both have similar equities. But it's the July 1st week, 2021. If somebody wanted to buy some equity for the next 10 years, just buy and hold. Give me 1-2 names that they should buy, or
July
something that you recommend.
July 1st, 2021, I would say Palantir.
Oh, because the Palantir is one.
Yeah.
For the next 10 years, just buy and hold.
I've meant a lot of them, so I've been changing that strategy as well. You've seen I've been getting a lot better at options. I've only been doing options for like a year and a half, maybe a year.
I remember.
And like I'm just getting better and better at options, and like equity, I'm trying to master the long-term game as well. Because equity, I did a lot of swing trading, kind of like 3-4 months. So what I would do is I would buy at supports and then I would sell at resistances instead of holding forever. So basically, like I would say SE is one of my favorites, but right now we're like right at resistance. So even I was peeling off some equity. I always hold a core position, which I trade around, but I always have runners that I peel off at resistance and then add back to at support. So my cost average always stays low and I always make gains on them basically.
Nice. Okay, so he's actively trading his equity plus long-term holds that he has. But SC and Palantir, his recommendations, right? But long-term, I think they're bound to rip.
Nvidia's not going anywhere, but I mean, it's on such a crazy tear. Like it's hard to call out these kind of stocks now. Like everything's just been on a crazy.
What do you think of AMD?
I love AMD actually. I know we have a friend. We actually have a friend that works very closely with Lisa Su. So he's very bullish on AMD. So am I.
And I do have a lot of leaps for 2023. And the funny thing is, I bought them at 22. They went down to $8, right? I still held through the entire turbulence. Now they're back at 18. I fucking feel good. Even though they're down $5, but overall my account, like it brought it up. So I'm still holding them. I think AMD goes nuts in the coming months. Any other tips to our listeners before we call it?
Yeah, so I liked, there's another question, the responsible leader, or Tony, actually asked me this morning. He sat with me for 15-20 minutes. He was asking me about a couple of charts and what I saw and stuff. And then he started asking me about how I have my portfolio played out. So I told him, like, for example, I won't give you real numbers, but I told him, like, for example, if my account is $100,000, right?
Yeah.
In that account, I'll have around 30K cash and around 40K in equity. So 70K is equity and cash. So that's readily available. Even if I need the cash, I can sell the equity. It's not going anywhere. And then about that's 70K. About 30K of that is options. So the last 30K, other than the equity and cash, 30K options. But out of that 30K, 16, a little more than half is options that are more than 3 months out. So I have BABA 2023, I have CCIV 2023, I have December calls on MQ. So that's more than half of my options. And then I would only play with that 15, 16K of short-term options. So that's what I would trade around. That's, for example, if a 100K account. Obviously my numbers are a little bit different than that. You guys seen how big I play sometimes. And so that's just how you should set it up. Just like what Ricky says, if you have any short-term options, that's not your money. You don't own that money. The next day, the stock that you have a short-term option in goes down $5, that option is worthless. You have nothing left. You can sell it for like 60 cents on the dollar. I mean, you're not going to get back that cash. So if you have longer term options, I'd say at least 3 to 4 months out. Obviously longer is better. And then you have equity and you have cash. That's your money. The short-term options is not your money. I wouldn't even count that in your balance at all.
So weekly options, if you buy them, I mean, that's not your money. You can make a lot on them or you can lose a lot on them, right? But if you have leaps, at the end of the day, it's all managing numbers. At least the value stays. Even though BABA's down, I'm not worried. My value is still held. My options are only down like 20%, not by a lot, like overall 25. That's fine in options.
Nothing.
Right? So guys, I think LB shared a lot of great tips with you guys. I hope you'll pick up some things. Listen to this once, twice, thrice if you have to. Right? Next week, Tristan's coming back, so I'm pretty sure he wants to be on the podcast with maybe LB with me. I have no idea, or maybe all three
Ricky's
of us.
gonna be host. He's a great host. Great host. I finally got rid of this. He's staying here.
No, I don't mind doing. I love this. I don't mind doing this because I picked up a few things myself from him. So it's a learning experience for me also. And so with this, we'll end it, guys. Manage your numbers, manage your accounts, protect your gains. That's all we can say. And not every day is a trading day, right? And good to have you back, brother.
Good to be back, man.
We're working really hard on some things. So keep an eye out. Do you want to say something?
If you guys want to come back, if you ever want to come to Tulum, make sure you bring some mosquito repellent. This place is deadly when you come back. I'm telling you right now.
Welcome back.
Let's go.
But thank you guys. Thank you, Coleman, Hux, Matt, and Tristan. We miss you. Come back soon.
Our guys behind the camera.
And thank you to the entire team of MyStockLife. And we'll end it with this.
See you guys.